Hello, everyone. All right, we're live. Thank you, everyone, for joining. So this is the first Ask Anna segment that I'm filming, and I decided to do it live. I felt that would be a better format than taking questions and filming it and answering it post-fact. It's more interesting this way. All right, so before I say anything about the market, let me make sure this is correct. Before I say anything about the market, I want to say that everyone's first priority should be their health. This is not influenza at all. Think of it more like SARS. We have protocols from China, from Europe. We know how it's spreading. It's a 1 to 14 day kind of incubation period. I think the average was 3 to 7. So what happens is if it's not contained, it has a hockey puck kind of distribution of infection. So the main thing everyone can do is to stay healthy. Nurture your immune systems. So common sense stuff. Get sleep, don't eat sugar, don't drink, don't cough on people, wash your hands. Do all those things that you should normally do, but do them extra now. Having said all of this, I want to put one more comment on Corona. While testing is good, and if done correctly, you can find hotspots and things like this. Really the emphasis should be on containment. I'm filming out of Miami Beach, and I think that Miami Beach has not done enough on containment. We had some unfortunate spring break incidents and so forth. Guys, this is not a joke. We know how this virus spreads around the world. We have models now from other countries. So we're an island. Containment should be our priority. We should get it done. The Asian countries that have contained well, like Singapore, Singapore had extremely high-tech tracking. They were giving people stickers that they had to put on twice a day, showing if they had their temperature tested, all those things. That's how they contained. And plus, they just followed orders better. They had containment, they had high-tech tracking, all that stuff. That's what they did. Containment is really key. Okay, so moving on from Corona. Now, before I talk about the market, I want to put it into broader context here. Anyone who thinks that this is business as usual, whatever your business is moving forward, this is not business as usual. This is an enormous generational event, the scope of which I think most people have not begun to understand yet. The world has never been more interconnected, and as such, I feel that when the chips fall, they have more momentum. So the global markets, the Miami market, all of it, it was all waiting for a spark. There were many extremes that were present in all of these markets, and the coronavirus was not just a spark, but it was a spark. It's the black swan event, but then also it added a global shutdown. We have countries shutting down. That's unprecedented. If you think of the economic impact of that, the millions of behaviors change at scale. Our unemployment number, is redefined. Well, it's redefined continuously, but it includes the gig economy. So imagine at scale, people changing their behaviors, not taking Uber, not buying all these things. It's really, the effects of it are mind-boggling. So this is absolutely not business as usual. All right, so now I'm gonna answer questions that I got throughout the week. Anyone that has further questions, please pop in, call in. This is obviously an evolving situation. And what's that Chinese proverb of interesting times? We're kind of in it all. So I'm going to start with a macro question sent from my good friend Mark Rubenstein, who I've known for a very long time. He was my chem lab TA back at college. I dropped his class because I hate physical things. I would have been a disaster in the laboratory, but he's one of my best friends. So Mark asked, are we basically watching the entire economy implode? Yes, obviously. It's again, we're in uncharted territories here. That emergency rate cut on Sunday was just a further sort of destroyer of sentiment. Obviously, incited panic. The second black swan event, I'll call it, was Putin playing chicken with the energy markets. The Russians are the ones who really blew up that meeting with OPEC, and then they doubled down Monday, Tuesday. I think Russia issued a statement that they can hold 25 oil for 3 to 5 years. That obviously kills U.S. shale and has all sorts of big effects on that. So yes, we are watching an economic implosion. New York imposed a moratorium on evictions, commercial and residential yesterday. All of this is uncharted. And I will add that in uncharted territories, you can't assume linear outcomes. I don't even know what a linear outcome is. All of this is unprecedented by definition. So we just don't know, and the magnitude of it is far bigger, I think, than anyone thought. I mean, the global economies are going to be shut down probably for 3 to 4 months. European countries, more of them will be shut down. They may have intra-country shutdowns, stopping cities from moving to countryside, so forth. So the economic ramifications of all of that have not even begun to be priced in, honestly. So yes, it is an economic, what do you say, implosion? Yes, Mark, I do think it is an economic implosion folding out before us. I have a question here. The science fictional type scenario is unfolding before our eyes. Yes, I agree. In fact, yesterday I was thinking that this seems like a movie that we're watching. The question was from Mitch. Hi, Mitch. So yes, I do. I feel it is a little bit like a movie. And on that front, I will say, look, I'm not going to sugarcoat anything, but I'm not, hysteria and stress, that doesn't achieve anything. You want to remove yourself from the collective hysteria, see where things are going, don't react with the crowd, don't go hoarding toilet paper. I mean, I'm in Whole Foods, people are hoarding toilet paper and raw chicken. Every day they come and restock the shelves with raw chicken. In the apocalypse, what's the raw chicken going to do for you? It's like ridiculous. All the canned food is there, but the raw chicken is disappearing. It's like people and the toilet paper. You know, it's like, it's human nature. People think they have some type of control in their lives. They really don't. You know, most people have jobs. They're in a system of sorts, and they rely upon some type of structure to give them something throughout the day. And when that goes away, they try to exert control by buying toilet paper and hoarding raw chicken. Question from John. How close are we to the bottom on the S&P 500? Well, on all the markets, good question. Somebody asked me that during the week too. I don't think we are close at all. I think that from highs, we can easily go down 60% on all the indices. And the reason I say that is, well, I mean, markets are overvalued in many ways, kind of in fantasy land, much like the Miami real estate market. But when momentum gets so strong, details don't even really matter. As we saw, you know, we went to highs and highs and highs and all these things in ways that were illogical. It's the same way on the way down when momentum shifts. So what was it? The previous record was an 87 for bear market descent, and I think it was 55 or 56 days, and we just did it in 15 or 16 days. So momentum is very strong on the way down right now. And also, I don't see what the blue sky happy story is going to be to come and shift momentum to change that. Where's the happy story that's going to make markets feel better, make people feel better? I think that most people have a hard time. They just don't have the context. They don't really understand how credit cycles work. They don't really know history. And complacency levels were at all-time highs before this happened. Risk was off the table. Complacency levels were at all-time highs. So when you get an environment like that, poof, it can just go super fast the other way. So I don't think we're even close to bottoms on any of the indices. I think that we're going to have travel restrictions for probably 3 to 4 months, in various phases coming out. And I don't see the sentiment shift happening for a while. Now, having said all of this, look, guys, this isn't World War II. No one is dropping bombs on each other. Like, I'm generally very optimistic about the track of humanity. If we think of the 20th century, there were all these cataclysmic, difficult events. I mean, world wars, all this stuff. And yet, where we are now, how we live now compared to how we lived 120 years ago is so much better. I mean, I wouldn't choose to live 120 years ago. I mean, we all have to get some perspective there. This is not famine and people dropping bombs on us. Like, my great-great-grandmother lived in Turkish-occupied Macedonia. I'm sitting here with my Mac speaking live to my friends. Like, life, we all need to get some perspective and not panic. But having said all that, I don't think that we're anywhere close to the bottom on any of it. So, okay, next question. Justin, when do you think the Miami market will crash? Yeah, that's an awesome question. So the Miami, I'm assuming he means the residential market. The Miami residential market was so primed for a crash. It was one of the biggest illusions of anything I've ever seen. Somebody else asked me this week, how did I get into real estate? How did I get into doing what I'm doing? So my background is in math. It's in math and physics, and which anyone who reads my stuff will see that's how I approach the markets. And the Miami market, it's such a poster child for manipulation and what's sort of wrong, and how I started to publish reports publicly about 2 years ago because I was offended and disturbed by the message that was put out largely by major residential brokerages. They're the ones controlling the information on the market. And I thought that was a real shame, because residential real estate is largely owned by individuals. And for most people, their home is the biggest single asset that they buy. It's a huge decision. And if your information on pricing and market comes from somebody who's not aligned with your interests at all, then we get questionable outcomes. And that's actually why I started to publish these reports. I was really offended by how the reporting on residential real estate here was so biased. I mean, it's just not outcome agnostic at all. And I mean, you have heads of major brokerages in 2015 saying, velocity is great. It's a great time to buy and sell. I mean, really, could you be any more of a cliche? Transaction volume in Miami Beach started to drop in 2013. We're below 2010 levels. And same pattern in Miami. Miami Beach has a higher percentage of high-end inventory, so that pattern is worse, but that's what's been happening. And, I put out a supply and demand report at the beginning of the year where, in fact, I said this market is such a house of cards that it's really vulnerable to an external trigger event, and boom, here we go. I mean, you have submarkets that have, they went up, supply went up 200% in a time period, from 2013-14 to 2019 Q4, where volume dropped 20%. So anyone looking at this market, those markets, and telling you that times are great and offering anecdotal evidence on how, oh, I'm getting calls from New York, and oh, my business is awesome. Like, anyone doing that is, at best, they're just clueless and making things up on anecdotal evidence. At worst, they're smart and they're just lying to you and talking their book, which is what I think was part of the problem. I mean, especially with new construction here. New construction here, really you can just think of it as like a stock promote. It's like a pump and dump. They create the market. They have these very, very expensive sales centers. They pay out 6 to 10% commissions. Like Paraíso related project on paper was paying out 10% recently. And that's on paper. Who knows what they'd actually give you. And they have the pretty girls bringing you coffee. They have the whole setup. So those are very expensive sales, and they are the market maker. When you own this property and you go to resell, you don't have the pretty girls bringing people drinks. You're not paying 5 to 10% out commissions. You're paying 3%. You have your agent. You have your MLS pictures. That's all you have. And then you realize that there's no market. There have been a lot of sales recently, resales for new construction projects that sold in the past 5 years at tremendous losses. That's actually pretty much the standard. Actually, I'm going to do a post on this later this week. There are tons, and now, there are tons of examples of properties that sold from the developer in the last 5 years that are listed at 20% losses at full ask before we even take commissions into account. So the whole thing was such a house of cards. In fact, I gave a 2020 market sort of outlook in January, and I said that the Miami market is not a magic unicorn that will defy supply and demand fundamentals. That was to the real deal. And I stand by that 1,000,000%. I mean, just it's, and the market here, it's so simple. It's a small data set, really. It's a very small set of data. You can get your head around it. You had supply like this, volume like this. I mean, really, guys, it's not rocket science. We know what's happening with this market. And again, anyone telling you otherwise is either lying to you, talking their book, or something. And that's why I started publishing these reports. I really think it's kind of criminal how that conversation was driven, especially, again, residential real estate is owned by individuals, and it's their biggest purchase. Okay, somebody else asked me here, what's your take on the rest of 2020 for home buyers? So yeah, good question. Honestly, if you don't need to buy anything, I wouldn't buy anything. This is a generational economic unfolding where we're in uncharted territories. It's all unknown. For sure, there are people getting margin calls, needing to liquidate, needing to get cash. I advise people to think of real estate like a stock. I mean, especially for condos, this is so easy to do. You can track the building, right? So it's hard to say when something is exactly at a bottom or when exactly it's a top. But if you have 10 years of data on something, you can track the cycle and you can see. So if a deal comes up now where someone needs to get out and they're in that bottom 10% of where that building transacted or where that neighborhood transacted, sure, I'd buy it. Real estate it has tangible value. It's not a blip on the screen that can go to zero. That is, in fact, part of the beauty of real estate. It costs something. There's replacement costs, there's material costs, there's all that stuff. So in a climate like this, if you can get real estate at below replacement cost, that applies to residential. If you just like something, or income producing real estate, that's not a bad bet. But in this environment, I would only buy something if it was a crazy deal. That's the honest truth. And again, anyone tell you business as usual, guys, like it's not. There's no such thing anymore as business as usual. This is a generational event. It's going to also change how people perceive risk, how they buy things. You know, the generation coming out of the Great Depression was noted for its frugality for a long, long time, and I think we're going to have a phenomenon like that. I mean, the trickle-out effects of this are enormous. But you know, I mean, Americans buy too much stuff. We have consumer credit at all-time highs, all that stuff. So sort of resetting with perhaps rampant buying and materialism and risk perception is not a bad thing. So, okay, so if you're a home buyer, I would look for crazy deals or not touch it, or I would wait for the dust to settle because we're not really sure it's all unknown right now. Boris, what will rent levels do on the beach in this Corona year? So they're going to fall. People are going to get laid off. That's already started. Some cruise line laid off 800 people on Saturday, I think it was. So all of this is downward pressure. I don't see how those prices can go up. I mean, we're actually, I think, going to have a bit of a deflationary environment right now. But rents is a simple question. I mean, obviously segments of this market that are more destination money dependent are going to get hit worse because who's coming? Destination money is out. I mean, Europe was in worse financial shape than we were before this. So European money is just, liquidity is going to be kind of gone across the board. So we can't expect foreign capital to come and rescue this market on the destination side, which is like, you know, condos over $500,000. On rental multifamily, we're going to have local layoffs. There are moratoriums on evictions. All of that is downward pressure on pricing. That's all it can be. 1 second. Ciao. Oh, somebody from Serbia. Goran. Hi, Goran. I'm from Serbia, everyone who doesn't know. I moved to New York when I was 3. Oh, and my sister. Hi, Maya. So, Goran. Hi. Miss Chicago, my sister. Okay. No, that was just a general hello. Well, hello. That wasn't a market question, but great to hear from you, Goran, in Chicago. There are a lot of Serbs in Chicago. I think they closed all the restaurants in Chicago yesterday, yes? Bars, restaurants, so forth. Miami Beach should do the same. You don't want to react when the emergency is there. You want containment. Maya, price of oil. Yeah, oil is really the fascinating other point here. That's also deflationary, and that was, I think, Putin putting in as much pain as possible. He really is sticking it to U.S. shale. He's playing chicken with OPEC, with everyone on the oil markets, and I see oil staying low or lower for a while. Again, I don't know. This is all unknown territory, but it's a deflationary part of our picture right now. Where do you see cruise industry stock? Yeah, good question. Yeah, you know, I have a good friend of mine. I was a pilot, a big commercial pilot. He flies jets, and he was sending me stuff about the airline industry cutting flights, slashing flights. Same logic applies to the cruise industry. Yeah, they're kind of toast. I mean, I'm not a stock picker. I'm not a trader. So trading stocks is a very different thing than looking at macro pictures of how things move. So, but yeah, they're going to be in a world of pain. I mean, it's not going to be pretty for any hospitality and tourism is going to be for some time. Is there an entry point for a long position? Not now. The dust hasn't settled now at all. It's still unfolding. It's all still unknown. We don't know how long anyone could be in quarantine in the U.S. We don't know. We're just beginning to see the magnitude of the trickle-out effect of all of this on businesses. You know, a big percentage of the U.S. economy is small business, and that's one of the beauties of the U.S. economy. And all of that's going to be impacted. Just changes of behavior on a massive scale. Millions and hundreds of millions of people changing their behavior. So again, I'm not a trader. If you're a day trader, you know how to play volatility, separate question. But on a macro level, I wouldn't go long on anything right now. This is just it's all still unfolding, and most of it hasn't even come close to hitting balance sheets yet. Where have I seen this before? That's a great question from somebody. So yeah, well, that's the history of humanity. Big turning points tend to happen when complacency is at all-time highs, much like World War I, which I like to reference in times of uncertainty like this. Europe destroyed itself in World War I, and there are thousands of books written to explain why, and we don't know. It's not clear. It wasn't Franz Ferdinand, one of my people shooting Franz Ferdinand. That guy, he was in a morgantic marriage. His kids were not in the line of succession. That wasn't really why World War I happened. No one really knows. Again, thousands of books have been written on that topic. So humanity goes in cycles. That's it. So we momentum builds. It goes one way, it goes another way, and now we're so interconnected globally that it perhaps, we have fast momentum. Like, we're the fastest ever descent now into bear market territory. So where have you seen it before? All throughout human history. That's where you've seen it before. And this time is never different. That's a point I cannot emphasize enough. I actually had a meeting with an economist from Yale a few weeks ago, right before the crash. And he told me, he said, we've evolved past market cycles. And I looked at him and I said, wow, I think you're the contrary indicator of the top. Now, he didn't even know what I meant, so he wasn't offended. But we have not evolved past anything. The human animal is the human animal. And we just have cool devices now. We have technology, but human nature has not changed. And now we're going to see people panic, do all sorts of stupid things like they have all throughout history. Kevin, hi, Kevin's my friend. Kevin Duffy, who founded and runs Bearing Asset Management, a hedge fund in Dallas. He says, how bad does the economic storm get, and where are the ports in the storm? That's a great question, Kevin. What do you think? I know he's been talking on this topic for some time. How bad does the economic storm get? I think that we all need to appreciate the non-linearity and the unknowns of these outcomes. All of this is unprecedented. Obviously, there are going to be massive layoffs. The moratoriums on evictions, I think, is just the start of government intervention. They're going to intervene on large scale, and as with most large-scale government intervention, large-scale government intervention seems to have no grasp on unintended consequences. So that actually scares me a lot. I'm not minimizing the coronavirus. It's not influenza. It's far worse. But the long-term fallout, the economic fallout, scares me more, as does the government intervention that it might incur. So So how bad does it get? I don't want to be alarmist, but I think it's quite bad. It's just the trickle-out effect of this all is staggering. I mean, look at Europe. Economies shut down for months. We're going to be shut down in stages for a while. So big. And where are the ports in the storm? Good question. Honestly, I'm not sure. I think this is going to redefine a lot of industries across the board. Well, actually, so here's the positive outcome. A few positive outcomes in this. One, education can go virtual. I mentioned this before. That's great. I fully support that. This school, especially pre-college school, was one of the most painful, excruciating parts of my life. And the more school can go virtual, the better. So I think that perhaps for education, that's great. We have student debt at all-time highs, but perhaps this redefines how we price and consume education, and that's a great positive outcome in my mind. Also, what's another positive outcome here? In times of crisis, I feel that we get a sort of focus on clarity, and the noise and the bullshit gets filtered out, and that's also something that I hope for. Like, when times are great, people's bullshit detectors are off, and you have all these people sprinkling fairy dust and saying nonsense. And so I think that in times of uncertainty, people are forced into clarity, and they're forced to believe what they see with their own eyes. And I think that's also the positive. I think that people providing real services, providing real information, I think that those voices will start to be heard more, and I think that's a positive. But beyond that, I just see a general economic reset. In rental market, is rental market frozen at this point? Yeah, I was just thinking that. John, good question. Unintended consequences of rent moratoriums. How are you going to evict people at scale if you have economies shut down for weeks or months and mass layoffs? You can't evict people at scale, nor should you. So I'd say a lot of markets are frozen at this point. I think we're in a bit of a pause, quiet period. Obviously, nothing goes to zero. Some people may have to and will move and rent and buy something. But in general, I see a total slowing down of everything. Kevin, will there be a reshuffling of the deck in which those who are ill-prepared don't get a lifeboat? Will there be a backlash against bailouts? Yeah, so part of my concern that I mentioned of the unintended consequences of government action is that the government will, through their actions and bailouts, disincentivize responsible and good behaviors. So will they clear student debt, consumer debt, all those things? I really have little faith in the government to act in a way that is constructive, and I'm saying this as someone who doesn't like either political party. So I don't think this is a partisan issue at all. This is not about Trump. It's bigger than that. It's bigger than all of it. So will there be a reshuffling in which... So in terms of people being ill-prepared, I mean, what was this? Some staggering percentage of Americans live paycheck to paycheck. So they're ill-prepared. Having said that, Americans buy a whole lot of crap they don't need all the time, and they don't even realize it. Life here has been so good and so easy for so long. But yeah, I'm a little bit scared of the bailouts because I think they're going to create incentives for bad behavior. I think there will be a backlash against bailouts, but in a time of panic, it's easy to manipulate people. So it's easy to, I don't know. I think there will be a bailout, but I think that there will be bailouts that incentivize and reward bad behavior, and that's good to the detriment of people who have acted responsibly. That's what irks me about student debt. You have people taking out ridiculous debt for useless degrees, and they're going to get a bailout, and then you may have somebody else who worked a second job, paid it, or did not get a bullshit degree, overpriced degree, and they're going to be left holding the bag for the irresponsible idiot that was bailed out. But I think it's going to be kind of that, going in that direction. Kenneth, my phone has been dead for a while. No calls on my rental listings or from my rental website. Yeah, I'm not surprised. Look, people are scared. People are going to be told to do social distancing, not to go out, not to leave their houses. So of course the rental market is slowing down. Everything is slowing down. I was listening to some podcasts the other day about these realtors in New York, and they're saying, oh yeah, we're doing open houses, business as usual. Guys, it's not business as usual. People, the fear is not going to wear off for a while. This has just begun, and it's not business as usual. You have people are going to get financially wiped out, and I don't see where the sentiment uptick is in the immediate future. So yeah, thank you for sharing, Kenneth, about your rental listings. I'm sorry to hear that, but I'm not surprised. People are not going to be moving for a while. Hey Tracy, how are you? Great to hear from you. How are things? So Tracy moved into a house a few months ago before all this started. Hope all is well at your new place. Next question. One moment. Here's a great question. Somebody asked me, Sean, my friend Sean asked me, how much of an effect does this have on poorly managed buildings? He mentioned that his building has a terrible management company. They're all suing and fighting with each other. So that's a great question. The actions of boards and buildings actually have far less of an effect on the values on those buildings than people think they do, as do renovations. This is one of the things that really irks me. All these buildings in Miami embark on these mega multi-million-dollar renovation projects seemingly every few years, where they disrupt people's lives, cause massive noise disruptions, quality of life issues, all that stuff. If you chart the price per square foot of these buildings across the beach and how they transact, you can't, looking at those charts, you can't find which one had a renovated lobby and incurred massive fees and assessments. It doesn't show up in the chart. It's wasted money. So I think there's a lot of stealing involved in these renovations personally. It's totally dysfunctional. So it matters less. It matters less than people think. Buildings tend to follow the market. So how much does the poor management affect the values in your building? Honestly, less than you think. They're affecting your quality of life more than anything. I know which building, I'm not going to say which building he lives in. Anyone knows him, I don't want to give away his address, but his building is performing just like every other building on the beach. So those, and this is a broader point too. People think that they attribute causality to what's ever in front of their face. But in reality, I've said this before, the macro drives the micro, and the big picture affects you a whole lot more than you think. We're all part of the big picture of sentiment, and that drives values of your property more so than what your board does. I mean, I don't know, unless they implode the lobby and cause a flood that lasts 6 months, there's very little that any board can do that's going to hurt values more than the overall economy will. And it kind of drives me crazy, because there are these buildings on the beach that have embarked on multi-million-dollar projects into a crashing market. So they assess residents huge amounts of money for beautification projects while the market is crashing. And the market has been crashing, I won't say crash, it's been a slow decline since 2013 in Miami Beach and Miami. So in an environment of clearly decelerating sales volume, they assess people huge amounts of money and embark on massive renovations. Like, it's absolutely crazy. But that's just symptomatic of the disconnect from reality that the Miami real estate market has had. People aren't aware of how small the resale market is. They're not aware of sales volume. That kind of kills me. That's actually part of why I started publishing these reports. Sales volume has been declining since 2013. And that's a major, major factor. And it blows my mind that no one besides me has published that. It's a very simple metric. You have sales volume like this, you have inventory like this, and that kind of tells you everything. And so volume now is obviously going to drop. Oh, by the way, January, February sales volume in Miami Beach before Corona hit was lower than last year. So that sales volume decline was in place. And the market was just looking for a spark, and we got like a hell of a spark. It's going to be kind of colossal. We have markets in Miami, in the Miami area, that had 100 months of inventory past $1 million before Corona. So I mean, it's like that. That's like 200 active listings and 1 or 2 sales a month. That's not a market. That's complete and total fantasy land. So now, given that people aren't leaving their houses, they're not moving, liquidity has been killed, people have lost tons of money. Like, what do you think is going to happen with these properties? What do you think is going to happen with debt on hotels, all this stuff, corporate debt? I mean, we're going to have a crash in debt, which is what's going to unfold. So the positive of this is like, perceptions of debt are going to change. People were chasing yield. It was all very speculative. And I think it's going to be a time to reset and consider in-place demand, real cash flow products that real people need, that are in line with trends, regional and bigger ones. Question, SPY, ETF, long position, entry around 200. Too technical of a trading question for me. Anyone here who's a trader wants to answer that, they can go ahead. I'm not going to answer trading questions, but on a macro level, I wouldn't go long on anything. But if you know how to play the market, God bless, go ahead. Anyway, what I was saying was that there's no accident that Buffett and Zell are the largest owners of mobile home parks in America. That's real demand, and people have to live somewhere. And the state of Florida last year in 2019 had the largest net positive migration number of any state in America. Number 2 was Texas, I believe. New York was a net loser, by the way, because probably taxes and people are fleeing high tax jurisdictions. But we had a positive here. People are moving here. There are very strong generational trends that will continue. This is not the apocalypse. We will get through this, but it will reset buying behaviors and risk perception. So in that environment, it's going to be important to have products, housing stock, whatever, that actually aligns with real people, with real demand, and they're in-place demand rather than destination money. The problem with the Miami market, residential market, is that it was in this last cycle, it was built upon this chase of destination money. Like, anything past $500,000 in Miami requires destination money. It's not local demand. And so I think that we need to reset and a reshift of focus to local demand, real things that real people with real jobs, real families need. That's been underserved. The Miami area has the largest percentage of cost-burdened renters in the nation. That's people paying more than 40% gross on rent. So we need to address that, and I think that that's a positive outcome of that. My pet just did that. Don't do that. Okay, next question. Never catch a falling knife. Better to buy any ETF when the trend is upward. It will take time. It will and give me the sentiment inequality. Big guys are still dropping and dumping shares. Too much to hold. Yeah. I agree completely. Never catch a dropping knife unless you're some rock star trader and you know what you're doing with that. I agree 1,000,000%. Big guys are still dropping and dumping shares. Too much to hold value while others are trying to buy in. Yeah, I agree 1,000,000%. There's nothing wrong with selling too soon and buying a little too late, because the upswing will be a real upswing when it happens. But yeah, you absolutely don't want to try to catch a dropping knife. And this is all just uncharted territory of epic proportions. So we can't assume any linear outcomes that make sense. I mean, what's the market doing today? Let's see. I mean, after the Fed decimated sentiment yesterday with that move. Let me see. Bloomberg. What's going on, guys? I mean, we had trigger. Oh wow, yeah. U.S. stocks pair dropped to 7%. Yeah, I mean, I don't know what the happy story is. Wow, Dow is down 7.7, S&P 8. I mean, the S&P is at 24. S&P can easily go to 16. Yeah, 60% off highs. 60% off highs. But anyways, as I was saying, I think that we need sort of a conversation shift in the real estate market here in Miami, away from this smoke and mirrors that has been dominating the conversation so far. Real people need real things. There is a lot of real demand here. It's a growing, wonderful place. I'm generally very optimistic on Miami. So when the dust settles here, I think that positive outcome here will be a shift in focus away from the house of cards that would have crumbled onto real products with real demand. I mean, let me tell you guys, if I saw one more bullshit article about the luxury space here, my head was going to explode. Like, I've actually charted how small it is, and it's so ridiculously small that when people tell you, oh, there's been a 40% jump in 5 million plus sales this quarter, like, that went from 4 to 6. Like, it's such a tiny market, and no one tells people this. It's kind of a joke, and I think it's unfortunate that conversation dominated, and I think it's unfortunate that simple truths like dropping transaction volume since 2013 have not been relayed to the buying public, and that the conversation was driven by people who are 100% talking their book. So here's the other point I'm going to make, is that when someone gives you advice on what you should buy or a forecast, ask yourself, what is their skin in the game? Do they have skin in the game? And what is their game? If their game is just to sell you shit, and if they lie or if they're caught lying, nothing happens to them. They have no brand integrity. This is especially true for people who work for big companies, because the company brand is their brand. It's not on them. They're not. Their reputation isn't just them. They hide behind the large entity. You can't believe a word they say. Really, what's their track record? So I hope that we have a reset there in that, and that people become more cognizant of the biased information that they're fed. And especially, again, in a market that is so simple to get your head around. Residential markets are so simple. It's just two charts: supply, demand, size of market. Like, it's not hard. So there really should not be this like black box. Like, I should not be the one who publishes like a report that says, "Hey guys, volume has been dropping since 2013," and people call me and they go, "No way, really?" I mean, come on, that that should not be a surprise. That should be obvious. And when I was doing that, people would write in and they would tell me, "Hey, isn't that bad for business? Like, why are you saying that?" And I would tell them, "No, it's not bad for business." Well, I don't know. Maybe I would make more short-term money if I lied to people and hustled them, but that's really not what I'm about. And I don't think that's where long-term value is. I think that there is value on clarity, truth, and integrity. And I hope that this cataclysmic event sees a reset towards that. All right. Did I have any other questions? Let me see. Anyone? Before I sign out. My friend Mike had asked something about lower interest rates. What does that mean for real estate and inflows of cash? Okay, so that's a good question on the interest rates. In theory, right, interest rates drop, you get lower interest rates in mortgages, refis, things like this. We're in a bit of a different predicament than that. If part of the curve goes negative, yields are negative, like basically banks will have a tightening spread in how they make money off of loans. People will be more averse to lending. So where we are right now is not going to see an influx of cash into really anything, even with interest rates like this, unless, again, people are buying distress, which is going to be happening big time. Like Carl Icahn had a big article recently talking about how he's shorting the commercial markets hard, and he's kind of a genius, and he's right. So, no, I don't see an influx of cash coming into anything. And what does this all mean for real estate? Look, on the positive side, real estate has tangible value. These are assets that cost something to replace, to build. So honestly, it's buying opportunities for people with cash, as is any cycle. There's always a top, there's always a bottom. This is just something of epic proportion, this unwinding. So look for the deals, anyone. The deals are going to be there. Kevin, is the lesson here that we need to think of ourselves and not rely on the authorities to protect us from every danger? Even though the Fed went nuclear to QE5, the U.S. 10-year Treasuries, hold on, great question, Kevin. The U.S. 10-year futures are only up 0.8%, Germany's down 1%, Italy down 3%, central bankers are losing control, and investors are on their own, no more security blanket. So, yes, I agree with that. I don't think central bankers ever had as much control as people thought they did. The Fed reacts more than sets. I made a little bit of a post earlier this week. I thought it was interesting. Berkshire Hathaway issued notes. They issued debt in the end of January at 0%. So they were already there. That was the Fed now actually is reacting to what Buffett did at the end of January. So yes, we should always think for ourselves in general. Mass hysteria in the collective is never where it's at, ever, especially in times of uncertainty. Just separate yourself from all of that. But are investors on their own? No more security blanket. Yes, I believe so. I believe there's more to this than we're even aware of now. And again, I'm going to circle back and say what I'm actually most concerned about are the ramifications and unintended consequences of bailouts that I think will just incentivize and encourage bad behavior. I think we're going to see bailouts that, yeah. Thank you, Kevin. Those are my thoughts, and thank you for your awesome questions. I've been a big fan of your thoughts and your work for many years. So thank you so much for chiming in. But basically, that's what I think. Everyone, stay away from mass hysteria. I think for yourselves, this is not a Hiroshima-style disaster. But having said that, it is a generational unfolding, and stay liquid, stay safe, stay healthy. That's the main thing also that I'm going to say on this. Yes, Davis, my friend Davis, take care of yourself and think for yourself. Absolutely. Common sense, I hope that we see a return to common sense. In times of like fairy dust and everything being happy and easy, people lose touch with reality because life has been so good. So absolutely, think for yourselves, believe what you see with your own eyes. And yes, generational unfolding, I agree. Believe what you see with your own eyes. And take care of yourselves, minimize stress, sleep. Oh, you know what? I'm going to tie this into my favorite topic, one of my favorite topics of late, which is the destruction of female sports by allowing people who are born male to compete against women, because I think it ties into all of this. This is all end of cycle behavior. When you're end of cycle, which we were very much so end of cycle, we were at a record long cycle, all sorts of thought patterns and behaviors that are kind of delusional that would not lead to survival and or prosperity in difficult times where common sense mattered, these types of thought patterns can take hold. And we have articles being written saying that it's and people saying that there's no conclusive proof, and it's questionable that people born male have an athletic advantage over people born female, right? This is the same type of thinking as saying we've evolved past market cycles. We have not evolved past anything. We've not evolved past market cycles, and we have not evolved past the fact that biological men, have an extreme athletic advantage over biological women. It's all part of the same emperor has no clothes insanity, where you can't believe what you see with your own eyes, right? You show people like household wealth as a percentage of DPI at all-time highs, all these metrics off the charts, and they're like, no, I don't know. I think we've evolved past that. And at the same time, you have like the New York Times running an article where they say, and I swear this was written, they said, it's time that we embrace gender equality in sports. Like, it's all wacky land where nothing makes sense and we've all lost common sense. Emperor has no clothes. We can't believe what we see with our own eyes. And so I really, really hope that we get a setback to common sense. I mean, as a simple example in sports, and I won't get too much into this, but every year, hundreds of high school boys run women's world records. And those world records were set by women in the sprint events. Like Flojo still holds them. They were back in the day. They were like on good drugs that you can't even get anymore. And high school boys break those records. And every year, it was in 2017, I got the data, over 4,000 men, over 18 men, ran what would have been the fastest time in the world for a woman in the 400 meters. So man number 4,000, who is nothing as a man, is the best woman in the world. And so it defies common sense and logic to say that you can just take some hormones for 6 months to compete against women and you have no advantage. And the same way that the market defied logic, it's all end of cycle. People get into like wacky land behaviors. They think that you can rationalize away common sense and the fact that the human animal has not evolved. So I'm hoping that in this unfolding, we go back to common sense. We move away from this emperor has no clothes, these emperors have no clothes phenomena that has been prevalent across spectrum, sports and markets, and we return back, to reality. So you know, I train at Fifth Street Gym, at the boxing gym here on the beach, and coach, I train with the pro fighters there. And I'm a runner. I don't box. I sprint. I run the 200 meters Masters track, and I have the very good luck of being able to train with Coach Dino and the pro fighters there. And Dino had this great quote. He did an interview in Hot Living magazine recently. Let me see if I can find it. And he had this great quote about how in every interaction it always comes down to like the human animal, that we are still that, and we haven't evolved. And I could watch a Facebook Live on just this topic. Nice value add. Thank you, Greg. Yes, it's something that I feel very strongly about, and this is where I see part of the silver lining in this will be. Let me try to find Dino's quote on how he was saying. It's a great quote on how, you know, every human interaction comes down to the human animal, and the same thing is true in markets. And if we think we're past that, and if we think that men can box with women, we've all deluded ourselves entirely. Right, Kevin, we can ignore reality, but we cannot ignore the consequences of ignoring reality. I agree 1,000,000%. And in this bubble mentality we were in, people had the luxury, I think it is, of being able to ignore reality because times were good for so long. I agree 1,000,000%. I mean, here's a crazy reality question. So I go to the track 2 days a week with the boxers. And again, these are male professional athletes. Like, I'm a super good female athlete. I'm very fit, but these are male professional athletes. They look like male professional athletes, and they're fighters. They look like tough guys. They're very nice guys, but they look like tough guys, right? So people will ask me crazy questions. They'll be like, oh, so do you box with them too? Or like, do women box with men? And I'm like, no. And one guy actually said to me 2 weeks ago, he goes to me, oh, come on, Anna, in 2020, can't women box with men? And this was before the crash, right before the crash. And I was like, no, nothing, nothing about humanity has changed in 2020 to allow women to box with men. It blew my mind. Like the fact that I was even asked this question, and this guy has seen me with them. It's like, have you seen these guys? Of course he's seen them. He saw me at the track with them. And he's like, do you box with them? Or do any women box with them? It was like, wow. And I told him, I said, like, you could train all you want, and you're gonna go fight these guys. First of all, they're not gonna fight you because you're a woman. They don't hit women. And that surprised him too, in a weird way. And but I said, there's no amount of training would make you different than a random woman off the street. Like, you can't box with them. Anyway, this just blows my mind that I was even asked this question. It just goes to show how removed people have become from reality. Gerard, if you want more advice, I told you we're going to live through a big crash. You laugh. I don't think I laughed at you, Gerard. I think I agreed with you. But that was a while ago, and I don't remember. I've been publicly saying that this is going to be a mess for a few years now, so I don't recall the conversation that you mean, but who knows what I said. I don't know. I've been saying this for years. Anyways, Boris, exactly. Reality rules, right? And I hope that we get this return back to reality. Let me find this Coach Dino quote about the human animal. It was very, very good. And by the way, that's one of the reasons that I love training at the boxing gym, because, well, I've been in sports my whole life, and I don't like to train with people who aren't athletes. I prefer training with people who are athletes, rather, because there's a certain mindset when you train to win that's different from just training. And also in sports, especially like in one-on-one sports, reality is always there. You've won or you're lost. You can't be in delusional la land, and that's something that I appreciate. It's very real. Okay, so this is Coach Dino's quote, and I hope that I'm gonna tell him that I read this. It's a great quote. So Dino said, this is a great interview. He said, and Dino's the boxing coach, by the way. He at Fifth Street Gym, and he said, every interaction we have with humans is fundamentally animalistic. You can develop the ability to develop yourself. You can have that confidence. You know not to go up to a wolf because the wolf might bite you. When you develop that confidence, you give off the air of confidence like a wolf, like a lion. People can smell it. So if you're negotiating business or alone at a date, the other animal can sense what kind of animal you are. You develop true confidence in yourself, and when watching yourself punch so hard, you prove to yourself what you can do. In turn, you believe it, then everyone believes it. So this is all true. Like the most powerful parts of communication are the unspoken and the nonverbal, and that's actually how the markets work too. It's all on animal spirits. We haven't evolved past any of it. So it's 2020. The human animal is a human animal. Women cannot box with men, and we're watching a generational unfolding of the markets. So that's kind of my synopsis there. Very interesting times ahead. Okay, any other questions before I wrap up here? I'll also say that we need to have an emphasis on containment. I'm going to share in a link here protocols that were published by, out of China, the Chinese actually have been very helpful in publishing protocols. And Europe and the Italians have been sharing distribution charts of infection and testing also. I'm going to publish all that, put links up for that. The emphasis really should be on containment. And I don't think Miami Beach is doing enough. It's up to a 14-day incubation period. So we need to get really serious about that. Any economic ramifications of shutting down businesses for a few weeks, that's a drop in the bucket to what long-term ramifications are of whole states shutting down for months. So I don't think that should even, as not nice as it sounds to say, I don't think that should even be a consideration. If we accept that this is highly communicable, which it looks like it is, what are the stats I have here? It's 80% infection rate, 20% severe cases, 2% death. So if we accept all of this, we need to act accordingly, and we know how it unfolds from how it has unfolded in other countries. We have all that already. So we should really focus on containment, stop being stupid, and get this thing under control. And stay healthy, everyone. Sleep, stay healthy, limit sugar, work out. Don't kill yourself working out, but keep the blood going and all those happy chemicals in circulation going. You can work out in your house, do little intervals. Stay healthy. I think staying healthy mentally and physically should be everyone's focus. No reason to panic. This is just an unfolding, and if you just stay apart from mass hysteria, get ahead of it. There are opportunities, of course, in all of this, and we will all get out to the other side, and I'm optimistic that this will be a good reset in many ways, and that government interventions will not be as bad as they may be. So again, generally optimistic. Humanity keeps advancing. Look where we were 120 years ago. So we will advance through this also. Just stay healthy, everyone. All right. Oops. Boris, true. What else can you do at the gym? So gym or home, I would advise people to do what I would generally advise people to do is some type of intervals. I'm a big fan of jump roping. You don't need a lot of space to do it. You guys know I love to jump rope. Get a jump rope. If you're a beginner, just do 2-3 minutes, maybe 5 minutes, get some jump roping in. Do an interval where then you do push-ups, sit-ups, crunches, sit in your chair, jump up. Maybe I'll do a video with Coach Dino. I told him we'll do a video for an in-house workout, which I think we'll film that maybe later today, tomorrow. But just do, 2 to 5 minute intervals, different things. Old-fashioned. There's no magic solution to exercise either. Old-fashioned stuff, body resistance really is the way to go. We don't use any fancy stuff. Just jump, plyos, burpees. Oh, Coach Dino's burpee challenge. This is super fun. You do one every minute. You have a clock that goes on the minute. You do one burpee. You can make them harder burpees where you jump up, as hard as you want. You can not do the jump, or you can jump with your knees up. You can make them harder or easier. But basically, 60-minute clock, do one burpee. Clock goes 60 minutes. You do your burpee, you wait. Next 60 seconds, you do 2 burpees. And up and up and up and up. And you see how many burpees you can do in that minute before you run out of time. I think my record was 14. It's like 140 burpees or something like that. It's a fun little game we play at the boxing gym sometimes. You can do that. Jump rope, push-ups, crunches, jumps, things like that. Do little fun intervals. All right, everyone, stay healthy. Wishing everyone an awesome day. Interesting time in the markets. And again, general optimism moving forward, but don't have your heads in the sand. All right, ciao, ciao. Signing out.